Hey everyone, welcome back. Today we're diving into the economic data to predict which 10 countries will be hit hardest by the upcoming recession in 2024. We'll analyze economic indicators, debt levels, and industry dependencies to identify the most vulnerable nations. Don't forget to like, subscribe, and hit the notification bell for more updates on economic trends and analysis. Let's dive in. Argentina is first on our list, and for good reason. The country has been grappling with economic instability for years, and its over-reliance on soybean exports makes it particularly vulnerable. Additionally, the country is burdened with high levels of debt, which further exacerbates its economic woes. The Argentine government has been struggling to manage its debt, often resorting to measures like currency devaluation and austerity programs. These measures have led to social unrest and a lack of confidence in the government's ability to steer the economy. Moreover, Argentina's inflation rate has been soaring, eroding the purchasing power of its citizens. Foreign investment has also been on the decline, as investors are wary of the country's unstable economic environment. In summary, Argentina's over-reliance on soybean exports, high levels of debt, and soaring inflation make it one of the countries most likely to be hit hardest by the upcoming recession. Next up, we have South Africa, a country that has been experiencing a decline in its mining industry, coupled with high levels of unemployment and a stagnating economy. The mining sector has historically been a significant contributor to South Africa's GDP, but declining commodity prices and operational challenges have led to a downturn in this critical industry. Unemployment in South Africa is alarmingly high, with youth unemployment rates reaching crisis levels. This has led to social unrest and a lack of economic opportunities for a significant portion of the population. Moreover, South Africa's economy has been stagnating, with low growth rates and limited investment in key sectors. The government has been struggling to implement effective policies to stimulate growth. The lack of economic diversification also makes South Africa particularly vulnerable to global economic downturns. The country's high levels of debt are another significant concern. In addition, South Africa's reliance on exports, particularly to China, makes it susceptible to global economic fluctuations. In conclusion, South Africa's declining mining industry, high unemployment rates, stagnating economy, and high levels of debt make it one of the countries most vulnerable to the upcoming recession. Turkey is another country that is likely to be severely impacted by the upcoming recession. The country has high levels of debt, and its over-reliance on exports to the European Union makes it particularly vulnerable to economic downturns. The Turkish economy has been struggling with inflation and currency devaluation, which have eroded the purchasing power of its citizens. The government has been borrowing heavily to finance its spending, leading to a growing debt burden. This debt is becoming increasingly difficult to manage, especially in the face of a global recession. The recession will likely lead to higher borrowing costs and reduced access to international financial markets. Moreover, Turkey's over-reliance on exports to the European Union makes it susceptible to economic fluctuations in the region. The EU is one of Turkey's largest trading partners, and any downturn in the European economy will have a significant impact on Turkish exports. Inflation has been another major issue for Turkey. The country has been experiencing high inflation rates, which have eroded the purchasing power of its citizens and led to a decline in consumer spending. In addition, Turkey's currency has been devaluing, which has made it more expensive for the country to service its debt and import essential goods. In summary, Turkey's high levels of debt, over-reliance on exports to the European Union, high inflation rates, and currency devaluation make it one of the countries most likely to be hit hardest by the upcoming recession. Chapter 4: Brazil's corruption and commodity dependence. Brazil, the largest economy in Latin America, is expected to feel the heat due to its high levels of corruption and its over-reliance on commodity exports. The country has been grappling with political instability and economic challenges, making it particularly vulnerable to the upcoming recession. Corruption has been a significant issue in Brazil, with numerous high-profile scandals involving government officials and business leaders. This has led to a lack of confidence in the government and a decline in foreign investment. Moreover, Brazil's economy is heavily dependent on commodity exports, particularly agricultural products and minerals. Any downturn in global demand for these commodities will have a significant impact on the country's economy. The country has also been experiencing high levels of debt, which have been exacerbated by the economic challenges it faces. The government has been struggling to manage this debt, often resorting to austerity measures that have led to social unrest. In addition, Brazil's political instability has been a significant barrier to economic growth. Furthermore, Brazil's high levels of inequality and poverty make it particularly vulnerable to economic downturns. The recession is likely to lead to higher unemployment rates and increased economic hardship for a significant portion of the population. In conclusion, Brazil's high levels of corruption, over-reliance on commodity exports, high levels of debt, political instability, and high levels of inequality make it one of the countries most likely to be hit hardest by the upcoming recession. Chapter 5. Chile's social unrest and declining copper exports. Chile has been rocked by social unrest and protests, struggling with high debt and declining copper exports. Widespread protests against inequality and government policies have led to a lack of confidence and a decline in foreign investment. The economy, heavily dependent on copper exports, faces challenges as global demand declines. High levels of debt and economic challenges have led to austerity measures, fueling more social unrest. High inequality and poverty make Chile vulnerable to economic downturns, leading to higher unemployment and hardship. Reliance on exports makes Chile susceptible to global economic fluctuations. In summary, Chile's social unrest, debt, declining copper exports, and inequality make it vulnerable to recession. Chapter 6. Italy's stagnant economy and high debt levels. Italy's stagnant economy and high debt levels make it vulnerable to the upcoming recession. The country has been grappling with economic challenges for years. Low growth rates and limited investment have led to economic stagnation. The government struggles to implement effective growth policies. High debt levels are a significant concern. Managing this debt is increasingly difficult amid a global recession. Italy's banking sector faces challenges with non-performing loans. An aging population further hampers economic growth. Political instability hinders necessary economic reforms. In conclusion, Italy's economic issues make it highly vulnerable to the recession. Chapter 7. Poland's declining manufacturing industry. Poland has been experiencing a decline in its manufacturing industry and is likely to struggle in the face of the upcoming recession. The manufacturing industry has historically been a significant contributor to Poland's GDP, but declining demand and operational challenges have led to a downturn in this critical sector. The recession is likely to exacerbate these issues, leading to further declines in manufacturing output and economic growth. Moreover, Poland's economy has been grappling with low growth rates and limited investment in key sectors. The government has been struggling to implement effective policies to stimulate growth. The lack of economic diversification also makes Poland particularly vulnerable to global economic downturns. High levels of debt are another significant concern for Poland. The government has been borrowing heavily to finance its spending, leading to a growing debt burden. This debt is becoming increasingly difficult to manage, especially in the face of a global recession. In addition, Poland's reliance on exports makes it susceptible to global economic fluctuations. Any downturn in demand from key trading partners will have a significant impact on the country's economy. In summary, Poland's declining manufacturing industry, low growth rates, high levels of debt, reliance on exports, and high levels of inequality make it one of the countries most likely to be hit hardest by the upcoming recession. Chapter 8. Thailand's tourism and export reliance. Thailand, with its over-reliance on tourism and exports, is expected to feel the heat of the upcoming recession. Tourism has been a major contributor to Thailand's GDP, but the industry has been hit hard by global travel restrictions and declining tourist numbers. The recession is likely to exacerbate these issues, leading to further declines in tourism revenue and economic growth. Moreover, Thailand's economy is heavily dependent on exports, particularly to China and the United States. Any downturn in global demand for Thai goods will have a significant impact on the country's economy. high levels of debt are another significant concern for Thailand. The government has been borrowing heavily to finance its spending, leading to a growing debt burden. This debt is becoming increasingly difficult to manage, especially in the face of a global recession. In addition, Thailand's high levels of inequality and poverty make it particularly vulnerable to economic downturns. The recession is likely to lead to higher unemployment rates and increased economic hardship for a significant portion of the population. Furthermore, Thailand's reliance on exports makes it susceptible to global economic fluctuations. In summary, Thailand's over-reliance on tourism and exports, high levels of debt, high levels of inequality and reliance on exports make it one of the countries most likely to be hit hardest by the upcoming recession. At Chapter 9, Russia's decline in oil prices. Russia has been hit hard by the decline in oil prices and is likely to be severely impacted by the upcoming recession. The decline in oil prices has had a significant impact on Russia's economy, as oil exports are a major contributor to the country's GDP. The recession is likely to exacerbate these issues, leading to further declines in oil revenue and economic growth. Moreover, Russia's economy has been grappling with low growth rates and limited investment in key sectors. In summary, Russia's decline in oil prices, low growth rates, and limited investment make it one of the countries most likely to be hit hardest by the upcoming recession.